Hey everyone, and welcome back to my channel. I'm Toyosi. In today's video, we'll be exploring a very crucial aspect into running a successful business, which is cash flow management. So if you're a business owner or an entrepreneur, then you're in the right place. We'll be looking at key strategies and effective techniques that you can use to master your cash flow. Let's get started. Cash flow management is basically the process of tracking the money that moves in and out of your business. It involves analyzing, monitoring, and also optimizing the net cash amount from cash receipts minus expenses. Cash flow management is basically forecasting the amount of cash that you have available and also putting in place strategies to ensure that you have enough cash to cover operations and also fund future expansions or other projects that the business might be looking to delve into. In practice or in accounting, we have a financial statement that helps to track or monitor the cash inflow and outflows of a business. It's called the cash flow statement, and the cash flow statement has three major sections. First, we have the cash flow from operations. This section supports your business's primary activities like sales and expenses. We also have the cash flow from investing activities. This involves cash flow that is related to sale or purchase of long-term assets. And the third section is the cash flow from financing activities. Financing activities includes debt, equity, and dividends. Now that we understand how companies and businesses track their cash inflows and outflows, let's look at why it's important to actually manage your cash flow. Data from the Bureau of Labor Statistics indicates that 20% of small businesses fail within the first year, while 60% fail within the 10th year. And one of the common reasons is poor cash flow management. Effective cash flow management helps to ensure financial stability. It helps you to control your spending, your expenses, and also increases your access to financing as investors and lenders usually analyze your cash flow from operations. So now let's look at effective strategies that could help you effectively manage your cash flow. First, you should constantly monitor your cash flow. You should always analyze how much you have in bank or in cash and how much you're spending on a monthly basis, annual basis, or periodic basis, depending on how often you prepare your financial statements. This will help you understand your cash flow better and also serve as a good basis for you to forecast your future cash flow. Accurate or very close to accurate forecasting of future cash flow will help you understand how much you need to be able to cover your expenses and how much revenue that you're expecting in terms of cash inflow for a specific period. Another tool for effective cash flow management is efficient invoicing and credit control. So immediately you provide a service or you're about to provide a service, you should invoice your clients. You should also state your payment terms clearly. And with credit control, immediately your payment is due, you should actually reach out to your client. You shouldn't wait forever before it becomes a bad debt. Before reaching out to your clients, you should reach out to them as often as possible. You're not going to harass your clients. You're just going to communicate and reach out to them saying, oh, my payment is due. When should I be expecting a payment? Is there a reason you haven't paid? Maybe you don't have the account number or you don't see it clearly on the invoice. How can I assist you in making this payment? With this, you know when you'll get your money and you'll be getting your money timely. Another tool or strategy that can be implemented is effective expense management. So you should track your expenses on a monthly basis, on a quarterly basis. Look at how much you're spending. Is it in line with what you had budgeted? If it's not in line with what you budgeted, maybe there's a reason for it and it's justifiable. You want to make sure that your expenses and your revenue are going at the same pace. You don't want to incur more expenses and your revenue is still at the same level or percentage. Another strategy that I would recommend is building a cash reserve. Ideally, you should have at least 6 months of your expenses in a cash reserve. This cash reserve will serve as a rainy fund if there are like unforeseen circumstances. For example, when we had COVID-19, nobody saw that coming and businesses had to shut down. Having at least 6 months expense in cash reserve will help you in case of a rainy day or something unforeseen happens. And lastly, I would recommend that you leverage technology. We have a lot of accounting softwares that are not too expensive, even for small businesses. It helps from invoicing to even preparing your financial statements statements, including your cash flow statements. Some even help you prepare your account receivable statements and remind your clients when they are due on payments. So as a business owner, I would recommend that you get one of these accounting softwares that helps you to understand your business, streamlines your business processes, and prepares these financial statements, and even sometimes they prepare forecasts and budgets for you. Those are broad strategies that can be used to effectively manage your cash flow. But if I personally, as an entrepreneur, for example, had to manage my cash flow, these are the tips or strategies that I would personally employ. First is cash flow analysis. I would make sure that I frequently analyze my cash flow. I understand how much I have in the bank, and I would also have different scenarios to show me, okay, so if I decide to burn XYZ amount more than I would normally do, where would I be in terms of my cash flow? I would do this on a regular basis because as a business owner, we like to take risks, or we want to expand, we want to create a new product line. But before doing all of this, I would do a bit of scenario analysis with my cash flow to see where I will be at different points in time. Next, I would delay outflows strategically. So I would literally contact my suppliers to say, okay, you're saying that I have 30 days to make a payment. Can I extend to 60 days? Doing this gives me more cash in hand, because now when I get money from my customers, I can hold my cash longer before I pay my suppliers. But I'm going to do this only strategically, because if I have a supplier that's going to give me a discount if I pay earlier, I would make sure that I get that discount instead of delaying the payments and maybe even incurring a penalty for paying late. So you would do it strategically, or I will do it strategically. I would make sure that I delay payments for as long as possible. Another strategy I would consider is exploring loan options. I would research the types of loans that are available to me. For example, as a female, I would look up loans with very low interest rates for women and apply to them, because loan is a cheaper form of financing when compared to equity. Lastly, I'll focus on my key unit metrics. I'll understand my burn rates, my cash runway, and all other unit metrics that are very peculiar to my industry or my business. Now, let's look at common pitfalls that business owners or even entrepreneurs usually make when it comes to cash flow management. First is unnecessary spending. Startup owners or founders normally are usually risk seeking, so they decide to just spend on different things, hoping that it would, convert or yield revenue in the future without proper analysis. Another thing is lack of forecasting or budgeting. Without a budget or a forecast, there's really no benchmark for spending. So now without a forecast, you just keep burning and you don't know, okay, am I supposed to buy this in this month, or is there a need for this at this period in time? So lack of forecasting and budgeting is another pitfall. Next is slow paying clients. You have clients that you invoiced months ago, weeks ago, even years ago, and they haven't paid for your services, and you haven't reminded them. You haven't taken steps to actually retrieve your money or to be able to get paid for your services. For big businesses, or depending on the type of service you offer, there are actually different tools that you can use to ensure that you're paid in time. One of this is factoring. Factoring helps you to ensure that you get your payments upfront without having to wait till the terms of the invoice elapses, or even if the client is late on their payments, you get paid in advance first, which is a tool that business owners and startup owners should actually try to leverage as much as they can. And I think lastly, and the most common pitfall that I would say, is not separating your personal finances from your business finances. As an entrepreneur or a small business owner, you tend to just use your company's money for your own personal expenses. It's very wrong. Business should be different from personal. I think every startup owner or business owner, small business owner or entrepreneur should always pay themselves a salary. So you pay yourself a salary at the end of the month, and you ensure that business money is business money. All excess cash that the business derives or gets is for the business. You are not spending it on your personal life or your personal thing. With all that has been said, I think these are tools or strategies that you can use or deploy to ensure that your business actually succeeds, your business thrives beyond 1 year or beyond even 10 years. And if you found this video useful, give it a thumbs up, and don't forget to follow at Toyosi's Finance Nugget. Thank you for watching, and until the next video, bye.